Okay, so order book absorption event 3, and it's observing time and volume slice order distribution information gathering patterns. So effectively what we're doing is sometimes these are a little bit more sophisticated than the simple vanilla iceberg. As we mentioned earlier on, and I wanted you to look into defining what a time and volume slice order on those links that I gave earlier in the slides. And really important to understand that the volume slice order can occur over potentially 100,000 contracts. And only gets executed every time 1,000 contracts go into the market. So it's your ability to now start looking at a more macro time frame or macro volume range. And sometimes when you observe an absorption pattern, it can occur over multiple hours, whether it's time or volume slice order. And it's your ability to see that over the bigger swing time frame that the market is really failing to advance towards the downside if there's a buy side time slice or volume slice order. And sometimes you can actually use on the various different platforms, or what they call aggressive buyers or versus sellers, or aggressive sellers versus buyers. Some they call it the delta of the markets. And really important that this is more information gathering into the next day's trading opportunity, where a market is fixed in a zone for a long period of time, and then the next day when the market escapes that zone, you get a momentum move as the congestion disappears. So time and volume slice orders are more a contextual understanding, and they can operate. You can get a volume slice order of say 50,000 contracts, and that can occur over a 20-minute period, and therefore that's a lot easier to see. But it's a little bit more difficult to see if it's over a larger time frame, and that's where your larger time frame contextual understanding is important, and that really develops as you gain more experience in this game. So as I've mentioned, these patterns can occur throughout a trading session and are harder to decipher from a micro time frame perspective, as the order book events are spread over an entire price or time range. The time slice order can say, buy me 100,000 contracts every 2 hours, and they use an iceberg to buy those. So it starts becoming more of a sophisticated type of algorithm when it's executing those types of orders. These execution strategies behind these patterns usually occur over a couple of hours, and therefore using the delta of the market as the main signal. So, for example, the market has sold off passively all day, and it's sold off, but the delta of the market is meaning that is negative 120,000 contracts. So effectively, there's been people actively hitting the bid then of 120,000 contracts, but the market hasn't really moved towards the downside effectively. Well, therefore, you do know that there's been a passive buyer sitting there all day. And if the market, the next session, starts reversing that sell-side activity, you'll know that there's 120,000 contracts that will need to unravel. So that's using a larger time frame contextual framework. So it's important to show the structure and fast, and this is a more a technique of learning, is show the structure and fast rewind video of an increasing delta but market not advancing. So go look at your recording. Look at how the market's declining, but it's not declining effectively, fast enough. And therefore, if there's lots of sell side activity, but it's not going down, and you watch it on your video, you can actually see in a fast time frame of actually a buyer sitting there all day whilst you watch the sell orders going through. And then this really results in a potential next trading session, trading opportunity.